Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, September 9th, 2024. It's 12:25 p.m., second video of the day, and here's what we're going to do. I'm going to broaden this one out a little bit more. I am going to start out with the indexes. I think that's very important now. I think we're at an important technical juncture, and have been pretty much since Friday. So I'm going to go over that. I just tweaked my max bounce target here on NQ. I'm going to cover that for you. But let me do this. I'm going to go through in this order. We're going to look at the indexes briefly. I already covered it quite a bit this morning. I'm going to do a brief update there. And again on the semis. To me, that's very important. Semis bounce, tech bounces most likely, and the market bounces with it. Otherwise, it goes the other way. Again, I'm going to cover the key levels and what's going to determine whether we bounce or take the next leg down. So you guys have those levels in front of you. Replicate them on your charts, set price alerts, and then most importantly, pivot. Be flexible, especially if you're an active trader. And, again, if you're a longer term swing trader, the same bounce levels that I'm looking at, if we get to, or the support levels below, are your objective levels to add. It's that simple. We break Friday's lows, we're probably going to go lower and quite a bit lower and probably start waterfalling selling if we can get anywhere near the previous lows right here from early August 5th, right? So you can increase, short exposure there. Likewise, if we do bounce, I gave you a couple targets. Again, I just revised one, and that would be your next objective level to either re-enter any shorts you recently closed or add to shorts, or if you don't have any shorts and you want to be short, you initiate a short. Likewise, if you're bullish, if you're bullish, I don't know how you don't go long here. It's at support. It's the, not just these 60-minute charts. I'm going to cover a few more charts that I didn't cover earlier today, the main index ETFs, daily charts. And then, again, these same resistance levels that I'm looking for potential bounce to, if broken, that triggers the next, wave of buying or buy signal, if you will, and takes us up to the next target. And then, of course, if you take out the trend line. So back to where I was going to go. So indexes, semiconductors, we're going to cover. And then crypto, it's been forever and a day since I've covered crypto. Just haven't had in recent weeks much of an opinion there. Got some things to share with you now, potential trade ideas. Natural gas, did post an update for you there, so I'll hit it briefly. And then the commodities, the ag commodities, wheat, corn, soybeans. And then the broad-based commodity ETFs. I want to talk about that. We have the CPI coming out on Wednesday. In the past, I've looked at the broad-based commodity ETFs to predict whether CPI would come in hot or cold. It was a pretty accurate indicator. But I also think the broad-based commodity ETFs are looking pretty attractive right now for trade ideas. So I'm going to get to that at the end of the video. And those DBA, DBC, those that hold a basket of commodities. Okay, so in that order. So let's start out with the indexes. What did I do to change the trend line? Not much. I had it right here. This is the all-time high in the NASDAQ 100. I had it come in and capturing that high there, so it came in higher like this earlier this morning, and on the charts I got out to, and up until right now. Just before the video, I pulled it in tighter. Why did I do that? It's better. I'd give it one little slight breach there, but you still have that primary all-time high, which is important. That's the pivot high right there. And then I have a lot more reactions now, including these more recent reactions. Now, what that does, it brings it in a little lower, but roughly, from that 18,500-ish support level, we're still looking at about a 5% bounce. There's the measured target right there. And again, that's if we went up at that fashion, the way it works. Again, we may just crap out, and you have the levels I've already covered. Take out the recent lows. That's pretty bearish. Come in here, hit that first target about 19,090-ish, maybe even a little higher. I'm going to pull it up now as I'm doing the video. Why did I do that? To come into that reaction low and that reaction high there and a little closer to that one. So that's 19,124. That's the first area. Well, second area, I'm sorry, where a reaction's likely. Let me move my measurement tool again. So first support, and it's going to be a pretty good one, guys. If they can get past there, it's going to significantly increase the odds that we're going to go up to those higher targets here and here. Why? Because first of all, it's pretty obvious resistance here on the 60-minute chart with some reactions right there and there. Started the waterfall selling right here once that level was taken out. Started a impulsive rally once we regained it right there, and we danced on it for a while here and had this. Right now, this, quote unquote, at least the latter part, I'm viewing as a whipsaw, which is a false breakdown. We took out that 18,500-ish support level on Friday, as I mentioned. But then we regained it, and right now we did. And that has, near-term potential bullish implications because, again, a whipsaw, aka bear trap, when you break that level. And we broke it. It was legit. We went home on the weekend under it, but they recovered it. So that's why I flipped back long. And that has potential to give the fuel for a short covering rally to get us up there. If we get anywhere near there, I'll give you my 2 cents at the time. But as of now, and that's all I can do is look 3 steps ahead and tell you that if we get there, that's most likely be scaling back or hard shorting, closing all longs, going back into a short. Again, if we even get there. First things first. Let's see how we finish today. But right now it's looking pretty good. Especially with that post sell-off dip. I don't know if you caught it we had some nervous profit taking from longs and some more shorts probably pile in. It was also a hit of the trend line. Remember, so we got to take that trend line out. So that goes without saying, but I didn't just say it. So resistance 1 is going to be the trend line pop, resistance 2, 3, and then these are minor levels really. Once we get up there, we're going to have a lot of kind of bullish sentiment, and bulls are going to be tripping all over themselves to buy, and so we'll probably just spike on up near to that trend line. We'll see. Again, 5 steps ahead of myself, but right now I'm just sharing the outlook and current posture, which is near-term bullish. All right, that's NQES. I don't think I changed anything there. We do have one spike above it, but that's the trend line. But there's more importantly, price resistance here at 54.90. So just like NQ is coming up on that trend line resistance now, ES is coming up on price resistance. You can see these reactions here. Again, it's a line I've had here since last week, at least, I believe, if not longer. And that's that. So, and again, these positive divergences could be the catalyst for, even more that could maybe get us to test the trend line at ES. Let me measure that from that 54.41 support. I have to do it this way. Draw a line. Resize it right here. That's certainly that would be about a 3.6% rally. Let me extend the trend line, and that is shy of what that potential max bounce target for QQQ or NQ is. But remember, the financials have already broken down finally, and so I think we'll see some underperformance there. I think you'd see outperformance on tech overall and underperformance on the financials. Before I move forward, let me see if that's all. Let me cover the main indexes, and then I'll get to the financials. I'll loop that in because it's related to the market. So on the S&P 500, you have this was support here. It was resistance at an all-time high, breakout, back tested it for a week, undercut it, gained it again, tried to get above it, and they shot it down. And there's a big old gap there. So that's a technically significant level. It's at 543, and we're holding above that right now. So that is, for the time being, bullish. And, this played out. There was the breakdown that determined the next tradable trend. And I still think there's more. And by the way, guys, a rally back to that also, again, would be another objective short entry, just like it was highlighted here the day after. We had a couple objective re-entries or new short entries or whatever you want to call it. So once again, a rally back there, and let me try to quantify it from basically that's going to be a total roughly from that support zone. Well, that's only about 2%. So we'll see. I'm going to put a line there for you. There's the bottom of the range, about 554.72. So another level to watch. And remember, at the end of the day, the S&P 500 intra-period in the morning of it tested the 200. So far, we still have the S&P 500 above the 200-day moving averages following the first test in quite a while of the 200. So, you just can't write the market off yet. Again, we take out the lows from August 5th, that's when the odds for those longer term targets being hit and being hit relatively soon within, months, starts to go up sharply. So QQQ also, again, successful test of the 200s. But where do we close? This is 449.47 is big support. Let me turn off all the lines and just show it to you this way. We'll do it another way here. Take a horizontal line. Here was our previous highs in QQQ. Took weeks of consolidation there. Actually, almost about a month and a half. Couldn't get through there. Let's give it another try, boys. Boom, we popped it. It's a breakout, back test, successful. Off to the moon, right? No, not quite. Came back down. And then we closed on it right there one day, and boom, lost it. Even though we've traded through it, you can see my volume of price histogram bars are big. That is an important support level. Okay, and we're at support. It is a level I do think goes, whether it goes today, later this week, or 2 months from now. That's a level I'll be watching. And again, lights out once you take out the recent lows, especially now that the 200s have come up higher with this bounce. So if you take out the recent lows, you're going to have clearly taken out the 200s, not just a punch through and test. Okay, so there's your update on the equity markets. Small caps, kind of a messy chart, but right here, remember we're coming off this first big divergent high, and then the trend line break, drop down there, hit support. Another divergent high, another trend line break. But like everything else, this is a good support level, 207.67. I created that level back on June 4th. It's been a level, quite a few reactions. We had a little false break of there, failed. They tried to rally back, rejected, rally back, rejected. Finally, one more attempt, gapped up, took it out, and exploded. So that is, the fact we exploded when we took it out is technically significant. And we lost it there, imploded to the downside. We've traded around. The small caps have been volatile as hell, and that's because of this uncertainty with interest rates and also people's perception. You got the guys and gals that are glass half full folks, and they're bullish, and we're going to get a rate cut. That's bullish for the small caps, because falling rates are bullish for small caps always, because they have higher borrowing costs than large caps, and therefore they're much more sensitive. Yes, that fact tends to be the case, and it's really, so it's a net plus for small caps, lower rates. However, what's not good for them is a recession, because small cap companies, a good percentage of them are on the verge of shutting the doors. They're highly leveraged, depending on borrowing costs. They're not cranking out earnings like your mega cap big tech companies. And so during a recession, you see a lot of small cap stocks close the door. So that's what, again, the glass half empty folks see, like me, and glass half full. So that's where you have this volatility. This is just market participants. This is the sybil of indexes right now. All I can tell you are levels. And so look, we're at support, hard stop, right? And if that support's taken out, then that's going to be net bearish, but take it in collectively with everything else that's going on. All right, that's your update on the indexes. Semis, not to beat a dead horse, but it's that important to me, in my opinion, to the markets. NVIDIA, day 4, as I said this morning, at support. We're still there. If this rally starts to gain a little teeth, we start to get up and break above those levels I started the video at, on ES and NQ especially, then you'll probably see them come in and start buying NVIDIA, the bargain hunters. If this is a stock in distribution, it's a stock that peaked back here. I'm not expecting new highs, but we'll just see what happens. There's still that primary trend line that gave us, that's last objective shorting ops here. But this is it. So it's simple to me. Bears win if we solidly take out the trend line, and then even better, this is still a BOD, or benefit of the doubt support, because it's relatively close, relative on 10%. You might say, Randy, that's a big number. No, that's cakewalk. That's a day live, good up or down day in NVIDIA can be almost 10%. So it's just we're a bad day or two away from that level, and then the 200's just below it. But like I like to say, and say often, you've heard it a lot, and you've heard a lot lately, support is support until and let's take it out. So that's it. And 60-minute chart says we've got a little POSD down here, positive divergence. You know me, I like me some positive divergences. And you got a nice downtrend line. So NVIDIA, and if NVIDIA pops this trend line, which looks to me likely, there's a long trade idea for you right there. Where to? I just eyeballing this right here at least. That would give NVIDIA a pop of about 10%. What would that do to the NASDAQ 100? Almost certainly take it higher to the tune of about the 5% I'm talking about. So things get crazy. You still have the primary downtrend line, although as of this point in time, that's not what I'm looking for. And again, I'm talking what the charts are telling me now, but if we go the other way, let me duplicate that, share that there. There's your divergent low. There was the last divergent low. We went long there, covered our shorts. We shorted there on the divergent high, and now effectively we're long here, or I am. I like tech right now. Still waiting to, well, whatever. I'm now looking to go long NVIDIA on a breakout. I'm long NQ, which is effectively being long NVIDIA. And if they break that trend line, yeah, I'll take some shares too. And still have some shorts, puts that are dated through October, so I'm okay there to ride out a counter trend bounce. And anyways, call it an indirect hedge, call it what you want, but I think that's time for some long positions in NVIDIA and the market if and when that goes. And again, from the look of it, I think it will. But if it doesn't, then that's it. You just have to react. And then the other one is Broadcom. Again, covered this quite a bit recently with earnings. Called it down post earnings based on the technicals, but then told you, look, we hit we took out the primary uptrend line recently, and we bounced hard right off the 200-day moving averages. This is simply another pullback to the 200s. As I covered in recent videos, we all see what we want to see. Some see only the 200s, and that's what they're trading off of. Others see that trend line, so it's just a matter of they're more buyers or sellers. So the short sellers that shorted the break of the trend line there got roasted. That was the day we were covering and going long. And so I'm sure there's some shorts that cover the break of the trend line again, saying, well, that was just a one-day reversal. We're below it, and it was 2 days. We're trading the second day below it. But as I told you this morning, backfill the gap, which is right here. That's why I had that line, the dotted line drawn. That's where I put it. That's 150.30 or so. And then you also have a potential downtrend line forming. So that's it. You can see, if you game and bounce off the 200s, then you're looking at maybe a 10% pop in Broadcom as well. And it doesn't change the longer term, because again, this breakdown is questionable because you have the 200s just below. So it's kind of a BOD thing. And, it doesn't change where I think the stock's going in the coming months, just in the coming hours to days. And that would be kind of leaning towards this, right? Okay, dokie. Intel, on the other end of the by the way, it's not just these two. Those are two of the most important semis. But of course, the index itself, the SOX semiconductor sector ETF, and then so many individual. If I just rifle through them quickly, besides NVIDIA, there's Broadcom, ASML, positive divergence on the daily. You could get a heck of a rally, and it's just spitting distance below, or a hair below the 766.22. That was a big level. That was an all-time high breakout, big gap, massive. Look at the volume price histogram. This is big support. It is below it at this moment, and that is net bearish. But with the technical posture, if the semis rally, especially if NVIDIA and Broadcom rally and QQQ rally, it's going to get it back above here. And then this is going to be a whipsaw, another false breakdown, and then send this one quite a bit higher, probably up back to that 860 level right there. And to quantify that for you, this is ASML, big semi, that'd be about a 16% rally. All right, AMD, this is just this market. We had a beautiful, well-defined uptrend line, broke there. But again, like all things we covered and reversed on August 5th, that's when everything bottomed. We went back up. We're back down through it. So it's kind of a, schizophrenic market. But, again, it's not easy right now, but you got to take everything collectively. And that's what I'm doing. And I'm trying to, best to my abilities, thread the needle. I know it probably confuses the heck out of some of you guys. Long, short, long. It's how I trade. I'm not going to sit through what could be a 5+% counter trend bounce, especially on my trading account where I'll trade pretty leveraged with futures and other things like that. If I think there's better odds that we're going to bounce 5%, and again, if I can quantify it, so if I'm wrong, what do? I lose 1.5%, 2%. That's how I look at it. And if I'm right, I can make 5-6%. Or we'll see where things go. So what I'm trying to do here again is show you collectively. This is big support right there, right? That was all-time high, rejected, divergent high, breakout, back test. And we had a brief whipsaw when everything went down, and we're there again. We are below the 200s, so longer term, intermediate, longer term, this is bearish looking chart. So maybe we rally back to the 200s. That's the trend line. I'm just trying to show you, Texas Instruments, that's ugly chart. That's one I wouldn't care to bounce, game a bounce. Qualcomm at support, 157.55, that previous reaction low, previous reaction high. Again, these are big levels. Multi-month high or multi-year high right there, same as that level right there. Breakout, successful back test, off to the moon, divergent high, island cluster top, which is a reversal pattern. Big drop. And so again, this is a level we traded through it recently on a lot of these, but these are still significant support levels. AMAT, effectively testing the recent low right there, previous reaction low. All right, so you get the point. Micron, just ever so slightly a hair below the primary uptrend line. So again, if it can recover it, that's more bullish than just falling back to the trend line like this and bouncing, because it is a bear trap. For those that said, oh, Micron on Friday broke support, trend line, primary uptrend line support. If it takes it back, all those short sellers that shorted, they have to start covering. Or they will start covering. Anywho, and there's a gap right there, a potential bounce target. So that's it, guys. To go on down through the rest of them, it's just going to be redundant. I just want to do one more. Lam Research, LRCX, another big semi. I'm just going down these, by the way, in descending order of market cap. So I'm not going to go all the way down, because no matter how bullish or bearish the last few look, they don't move the needle as much. Lam Research is a $99 billion company. And so as we get smaller and smaller, they don't matter as much. But look, beautiful level. All-time or multi-year high, tested again, breakout, back test, successful back test at the August 5th lows. Again, these are great support levels, guys. And yeah, bigger picture, I'm not looking for a ride to the new highs right now. We took out the 200s. We successfully back tested, got rejected. I'm just, looking today, tomorrow, right now. I'm just looking this week, near term. We'll see where we go from there. And look, just as I'm speaking the fact that these are support levels so far, those that are at support, like LRCX, are at support. Those that are just under Micron, they need to lift up. And that would help, the bullish case to maybe give us a little more than just a couple, 3, 4, 5% bounce. So again, I'm going to continue to analyze these charts minute by minute, tick by tick. I am going to step away from my desk for a little, run some errands with some stops in place. I got a few things to do today, so I'll be back later. Only going to go out for about an hour and a half, but I will be back. But there's a downtrend line, and I don't know. We already tested the 200s. I don't think we're going to kick back that far. But all I can tell you is possible. And there's 862.86. It's also very good price resistance, and the 200s are in close proximity. So that's a max bounce target for LRCX if you want individual. You can give me on the comment section if any of you prefer to trade individual stocks. And I'll try to include more of these as trade setups. But I think generally most like the ETFs, they're easy, one size fits all. Trade SOXX. If you want to juice up today, you go SOXL, 3-time long, semi-bull, and you can try to game a bounce on that. All right, let me move on quick so I can finish this up. That's your update on the semis. Crypto, I track the spot crypto, and I tend to trade the futures when I'm trading them. But I'm going to go over the spot. Let me start with Ethereum, because it's the only first chart I saw. I have that in Bitcoin marked up. Here's your levels if you want to replicate it. This is ETH, the crypto. through Interactive Brokers. They trade on the Paxos exchange. It's you can buy crypto directly, or you can try the futures. It's ETHUSDRR, if I'm not mistaken. It's a whole mouthful for the futures of Ethereum. But what I can tell you, there's your downtrend line. There's a setup for you. Downtrend line, divergence line, meaning positive divergence, higher lows on the indicators versus lower lows in price. This is a rough support level, and that's it. It ended here with this divergent high. Covered that way back then. We had these divergent highs. There was your sell signal, and it started this whole downtrend. Crypto is a risk on, risk off thing, and so if my call for bounce in the stock market's correct, you're going to get risk on, and those crypto folks are going to buy that. So there's your level. We're close to it now. Break above there. Here, I just queued up a chart of ETHUSDRR. As I said, it's all mouthful. Ethereum futures. There's your downtrend line. MET, as I was queuing that up, is the by the way, is the micro or mini. If you don't, like this contract or the what they call a multiplier. Futures have a thing called a multiplier. You just basically take the index price, like whatever the S&P 500 is trading at, times its multiplier, and that's the net nominal value of the contract. When you go to those micro or e-mini futures, they just have a smaller multiplier, but they use the same charts. They same base index that they're tracking. So there's your level targets for you futures traders if you want them. And there's it used to be, remember they rolled out the new Bitcoin ETFs. I used to always follow GBTC first to market, and then ETHE, and now there's a whole handful. So let me know if you guys have a favorite crypto tracking ETF. I'm trying to just draw up some lines here, potential levels. So I'll call that right there. Well, there's your levels. If they pop this, max target 3105, preferred target about 20. That's 2800 right there. Bitcoin, BTC. Oh, it just popped. Okay, Bitcoin just gave me a buy signal. So I made these right before the video. I had these uptrend lines I want to share with you. There's a breakout in Bitcoin. BRR is your futures contract. And I'll mark this one up for you same way. There's your downtrend line right here on the futures, which the futures aren't yet reflecting the breakout on the spot crypto. There's your divergence line, positive aka bullish divergence, and targets for you. Targets. I'll have to study this a little further, sharpen my pencil, but I think they're right up here is likely. Just give you one, keep it pretty simple. So that'd be about a 8-9% pop there minimum. And preferred, we'll call it my preferred target. I'll look at this later and might extend, might even pull these away. But like everything, it topped recently with the divergent high on the cryptos. It put in that divergent high, and that was a catalyst for this big drop. And so that's it. Likely to get a counter trend pop here, especially and primarily if the equity markets bounce. There's a BOD level, 57,353. Once that pops, this should run. And again, you can Bitcoin. I don't know. There's so many dang ETFs out there now. Bitcoin ETF. Let's just pick this one here. BITI, I think, is one that's popular, if I'm not mistaken. TTO, I can tell you here on this one, BITI, there's just this trading range. If it pops out, it's probably going to run. Let me just leave it at what I gave you with the futures. That's the real deal. All these little ETFs out there, just I believe, I don't know, maybe they're holding spot Bitcoin. I really didn't look into them, but usually ETFs and ETNs will track futures. So that's it. So you got those like Bitcoin, Ethereum, especially if they both break out above those trend lines I just gave you, with Bitcoin spot just doing it now. Nat gas, I already gave you an update, really not much to add there. 60-minute chart, holding this uptrend line right here, and that was what I wanted to convey. As I have been, this whole trading range, basing pattern, potential W bottoming pattern here. If we can run up to the top and then break out. That should be a pretty powerful catalyst. And I will most likely, as I've been saying, add additional targets. But don't get married to her. She's the widowmaker, I call her, nat gas. So then you could keep a tight stop over there, but they sometimes tend to punch through these little uptrend lines. It's just it's objective to buy on, and there's also support right there. Remember, that was former R1S1, meaning first resistance before we broke out, and then support. So there's if you want to keep tight stops, I'd have it a little bit below 1342. The ag commodities, still looking good, not on fire, just a way to diversify. Wheat, this is a daily chart, still coming off that divergent low. Initial leg up, pulling back to support here. That's a daily chart. There's what it looks like on the 60-minute chart. T1 hit, pull back, the little uptrend line broken. So we basically need to pop the recent highs to open the door to these next targets there. That's wheat. And remember, the grains tend to move together. Corn popped the bullish falling wedge after the divergent low, hit that 1819 first target, the downtrend lines just above. So if it can pop these two, it should head up to the next stops about 1870 and then 1940-ish. And then the other one, and just let me show you to you on a daily. That's what it looks like in the daily chart. Big positive divergences on the daily, which give you potential for a whole lot more upside. These may be longer term swing or trend trades. I think as the stock market continues to deteriorate, and more money is coming out of stocks and they see recessions likely, institutions are going to rotate money, as they have been, by the way. We're in a distribution mode, bigger picture. And I've been pulling out in the video all the high flyers, even the big fangs. And that money is going to find its home somewhere, especially when the Fed starts lowering rates again. So commodities will probably be a beneficiary, especially, the charts are constructive. Soybeans is your other, or SOYB, your other, of the big grains. And that's just, another divergent low there, breakout, and these are your previous targets. They're still longer term targets, although this is your next target now if you were long off this divergent low, 2273. And then I told you I would finish the video covering broad-based commodities. DBA is the ag ETF. Oh yeah, that's not the one I intended to cover. I wanted to cover the broad-based ones, which I will. But I've told you for a while, this is where I think I've harped on the benefits of this. That we're in a new, believe a new longer term, whether you want to call it an inflationary environment. Certainly inflation's abated, but it's not gone away. And more importantly, the charts just have been very constructive on the ag commodities. This is last bull market peaking back here in '08, everything bottoming with a divergent low back there. And by every metric, taking out the primary downtrend line, taking out all your previous reaction highs. This looks to still appears to be early bull market action. And, the fundamental case is there again, stock market being overvalued, money going to move out of tech. I think it's safe to say that that there's only going to be an increasing demand for agricultural commodities as more and more people, or we have what I believe to be a population crisis on Earth. It's only getting worse. More and more people every day on this planet, more and more mouths to feed, and less arable land. So, and not to mention inflationary expenses. That remember, when the rate of inflation abates, which it has recently, we haven't gone backwards. We're still, by even conservative metrics, over 20% above where we were just a couple of years ago. The cost of everything, general inflation, and so Farmer Brown, it cost him that much more to put diesel in his John Deere harvester, which costs that much more because the labor that John Deere has to pay their employees to make those things, and the steel they need to buy, and the computer chips they need to put in them, and everything to make them run. You got the point. So it's not just rainwater and dirt you need to grow corn and get it to market. So anyway, that's you can see these guys have been holding up. But DBC is what I want to show you. This is a broad-based commodity tracking ETF. Again, you go back long-term, commodities peaked out here in '08, came down, put a big divergent low there, took out your primary bull market uptrend line, and this appears to me to be the first corrective wave in a new, with that being the first wave up in a new bull market. And so that's a long-term chart, daily chart. And by the way, you can see the divergences I highlighted last time have only got larger here on the weekly time frame. And then you zoom down to the daily time frame, which is more accurate for timing entries and exits. And this is where, I highlighted it back here, and it's the same thing. We had a bullish falling wedge to support. We broke out, we rallied, but we got rejected off this downtrend line. So this is the level. We have this triangle pattern pinching here. We have new lows recently, multi-month, even a multi-year low, but it's a marginal new low and it's a divergent low. And so if they can pop back above 2177 and especially break above the downtrend line, that's going to be longer term bullish. And then you also have DBA, which is an DB. There it is, DJP. That was the one I was trying to think of. This one I've tracked for years too. It's the Dow Jones UBS Commodity Index Total Return ETN. And that one's holding that 2932 support like a champ. I've been highlighting that as objective buy points on it. Again, like last two times we were there, this time and this time, as I highlighted, we had positive, aka bullish divergence on the indicators. And we do again this time around as well. So that would probably, crude's looking not too bad too. So you get a little downside to that support level, but a break above the uptrend line would be bullish. And, they're going sideways. Think about commodities, they don't pay dividends, so you got to be patient. And it's just a way to diversify asset allocation. I don't see them screaming anytime soon, but again, I'm just pointing that out as a place to maybe put some of your, longer term funds or to diversify. And then last but not least, USO. It's actually the futures. Yeah, I see it here too on the ETN. Positive divergence on the 60-minute chart. Same with the futures. So maybe a little rally for crude oil. And that, by the way, the reason I brought up crude oil, that is one of the biggest, it is the biggest, energy is the biggest component of these broad-based commodity ETFs. So just keep that in mind, that a lot of the weakness has been due to crude, as I showed you. If you back out, if you just look at the ag commodities, then you can see that they've been doing a lot better. So there's that. And that is it, folks. That's pretty, it's not all inclusive. If you want anything else, updates on, I'll mention XLF because somebody asked, and then give an update, thoughts. Remember, financials, we broke the trend line there, and then had a nice follow through, big red candle, and we hit to the button on Friday, the BOD, what I call benefit of the doubt support level. When you have two support levels in close proximity, you want to give it the benefit of the doubt, wait for the second to go. Plus, that was a big level. That was all-time highs right there, multi-year highs. We consolidated for about a week there, finally breakout. And so basically Friday, as mentioned, was just a back test. So that level needs to go. And I think it will go based on the technical posture. It's just today is, like I said, most likely because of the constructive charts on the S&P 500 and this, it's not just XLF. You look at the top components. JP Morgan just bounced off the 50-day, but Visa still above trend. MasterCard, successful defense of the trend line. Bank of America hit support on Friday. Berkshire just broke down. So yeah, I think we'll see weakness. A lot of these financials just broke down, and the few that haven't are close. So this is one sector that I think will probably drag down the S&P 500 in the coming weeks. But just today, we're getting these oversold bounces. They're buying Wells Fargo with the 200-day and so forth and so on. So bottom line, it's, again, simple. I can't project how far this bounce is going to go in the financials, but I can tell you, set a price alert under Friday's lows. And once that's clearly taken out, that'll be the next leg down to take us to my next target here, which is the intersecting 42, 43-ish support plus this uptrend line right there. All right, I'll wrap the video up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.